Yeah, Afcons has opened and it's a solid company. But I guess Friday's sentiment didn't support the subscription number that came in on day one. Very, very muted response on Afcons on day one, which was Friday. It was only about 10%. But just very quickly, let's take you through it. It will be closing tomorrow. So keep an eye on Afcons. If you want to subscribe for it, you've got today and tomorrow to do it. It's a very big one. 5,430 crores. The price one is 440 to 463. And of course, the anchor investor book was fully subscribed at 1,621 crores. Let's break the IPO down for you. There's a fresh issue of 1,250 crores and an OFS by the promoters to the tune of 4,180 crores. Some solid hands have come in as expected. Anyone looking for value has, of course, jumped into this one too. HDFC, ICICI, Pru, a couple of global names like BlackRock and Fidelity, Goldman, HSBC Group, amongst others, subscribe to their anchor book. Let's tell you what Afcon does. It's a 60-year-old company which is part of the Shapunji Palanji Group. It's a flagship EPC company. The company to date has completed 79 projects, and it's not just a local player, but a very significant player in the global market. They've completed projects to the tune of 56,305 crores so far. Well, what are they going to do with the money that they raise? Of course, the promoters will take some money off the table, but they'll spend about 320 crores for long-term working capital, 600 crores for payment, repayment and prepayment of debt. Of course, it's an EPC company and hence high debt, so no surprises there. Some of it will be used for corporate purposes, and 80 crores for construction equipment that they're looking to buy post this IPO. Well, financials, the company has been growing healthy. Their order book is also fairly large, currently stands at 70,000 as we see it. Revenues have grown by 8%. Net profit is up 9.5%. Order book stands at 31,747, which is made up of about 75% is their domestic book and 25% is the global book that they have. Margins have also risen quite sharply. Well, what works for Waree, for Afcons? They have a very solid track record in large, complex projects. They don't compromise on margins because they work on very high-valued transactions or projects where competition is limited locally and globally. This is also a significant player and ranked in the top 10 worldwide in the business that it continues to perform. Well, a couple of risks that you want to be mindful of. 69.8% of its orders come from the government, so any changes in the government strategy or plans could impact Afcons pretty immediately. Financing shortfalls could impact operations, and that could be for any EPC company. There are fewer new contracts that could impact potential growth on Afcons. Valuations are at a P multiple of 36 times. So that's what you have in terms of Afcons. It's a good company. That's the verdict coming out. Most brokerages are constructive on this one, but because of the larger market sentiment, the first day subscription number was not very impressive, only coming in at 10%. The other one that the street was very excited about and literally caught the market sentiment at the right time, or defied market sentiment in some ways, was Waree Energies. It was one of the highest subscribed IPOs in the recent times. 76 times is what the IPO was subscribed by. Again, a big one, 4,312 crores. Anchor investment was at about 1,277 crores, and the subscribers to the anchor investor book were also some very significant marquee names locally and globally. Now, Waree Energies is a frontline player in the solar business, which is at the cusp of significant growth. The only other comparable in the listed space is Premier Energies, which trades at a far higher valuation than compared to Solar Energies, and of course is 1/10 the size of Waree Energies, not Solar Energies. Financials as well have been very impressive. They've grown significantly. They're up 46% in the last 3 years in terms of revenues. Margins are up from 3.9 to nearly 14%. Profits have also grown very, very healthy in the last 3 years. Well, the future looks strong. The order book is healthy. They are acquiring orders not just locally, but globally. Valuations are also compelling. The only risk is that they do depend on some US exports, which of course could impact the business if things don't go in the way that they're hoping it does. All in all, a significant premium. Last week, the grey market premium was 100% to its upper band of price. What we have this morning is 80% higher. So what we're expecting is quite the blockbuster listing, Tamanna Neeraj. It should be a good one. We should be tracking this at 10 a.m. this morning.